My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll be one of my friends. I'm just trying to save you some money. My job is not just to entertain, but to educate and put all this in context. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. People need reasons to buy besides declining prices. And this market just isn't yet giving you any. Yeah, the Dow plunged 614 points. S&P plummeted 1.7%. Nasdaq nosedived 2.19%. Hey, they were all much lower at one point. But I say, so what? You buy stocks because you think they're headed higher, not because they've come down from their highs. You buy stocks when they're too cheap, not merely when there's some sort of dip. A dip is not a reason to buy in itself, even as dips have been buying opportunities. I spent the last couple of weeks warning you not to buy stocks here. I told you that we've been hit and will be hit late September every year, 2 decades, big swoon. Yet I think there are lots of people who've forgotten that stocks can still go down and stay down. It's just dawning on them that you can lose big bucks in stocks. Others just got into the market recently, so they've never seen a sell-off happen. They feel betrayed. They want stocks to go back up because it's their right. It's right because they're like vacuum cleaners with warranties or something. How dare they go down? Maybe because I've been doing this for 40 years, I got a different approach. I look for reasons not to buy stocks just because they're down. I'm not attracted to dips. I'm attracted to stocks where we've got good reason to believe they'll be able to bottom and start working their way higher. If I don't see those reasons, then I will not pull the trigger. Let me give you some examples of what I'm talking about here. First, let's start with the Chinese Conundrum. They're finally starting to talk about it. I love that. Thank you. Last week I mentioned there's this real estate developer called Evergrande with $300 billion in liabilities that could be on the verge of going under. Now, unless you're a country, you should never have that kind of debt load. Sure, there are a handful of companies that are large enough to count as countries. Evergrande's not one of them. This is a property developer that's so strapped for cash it probably can't pay the interest due this week on some of that debt. The Chinese Communist Party seems to be no friend of Evergrande, which was founded by a guy who at one point was the richest man in China. This year, their government has remembered that it's supposed to be a communist regime, which is bad news if you're a capitalist in need of a bailout because they want common prosperity. And we had uncommon rich people running this. Of course, there's a silver lining here. Despite their embrace of free markets over the last 40 years, at the end of the day, China does have a command economy. If the government wants Evergrande's management team to go down, well, the shareholders can get saved. That's what will happen. If they want to punish the shareholders but save the financial system, they'll let the stock go to zero but bail out the creditors. If they want to punish everybody but let the business keep running, they'll nationalize it. They're an authoritarian regime. We keep thinking there's some sort of democracy. They can do whatever the heck they want. Problem is, we don't know what they want. That's why we can't just jump in here. While we think the Chinese government must have a plan, we have no plan what that plan is. And most investors wouldn't believe them anyway. So we have to let this play out. I'm calling it the Chinese Conundrum. Second, there's this debt ceiling issue. Now, we've been through a number of these debt ceiling issues, these tussles. They always end up getting resolved. This one will be no different. The worst was 10 years ago when our government got hit with a debt downgrade by the S&P. It was wrong-headed. Market dropped 19%, but it did cause a bottom. However, if you tried to anticipate that down 19% when it would bottom, you got run over by a freight train. 400 cars. Again, I think the debt ceiling will be raised or the White House will find some sort of workaround. But we could be in for a lot more sturm and drang before that happens. Third, not long ago, we thought we'd get an infrastructure bill, maybe even another stimulus package. Now everything's gridlocked and we've got no idea what Congress will do. So how can we anticipate anything from Washington? Fourth, COVID cases have peaked. Well, maybe they haven't peaked. Maybe we'll discover a whole new wave after football stadiums are jam-packed with fans. I've got no idea, nor do the professionals, which is why I'm hesitant to turn bullish after today's beatdown. Fifth, the Federal Reserve meets this week, and there's rampant talk about how they'll taper their bond buying program. Aren't you sick of the word taper? If the S&P 500 is down 10% from its highs, and Fed says nothing about tapering, will that send stocks higher? Is the absence of a negative when you don't even know what that negative is positive? know. 6, I spent all of the last 2 weeks warning you that now we're in the seasonally weakest time of the year, and you should either go short or take something off the table. But given that the market pulled back ahead of time, does that mean the weakness is baked in? As painful as today was, you could argue, and I will, that we're still at the beginning of the decline because the calendar is very ugly for the next couple of weeks. The fact that the Dow Jones average has turned negative for the quarter means nothing. It's just a collection of stocks. Collections don't collectively decide to stop going down. The idea that I'm now seeing and hearing panic and negatives is positive, if only because we've been castigated for being too negative for these last 2 weeks. It was impossible to read my mentions column, even more than usual on Twitter, because I was so negative, so negative. Well, sorry. Next, we need fewer IPOs flooding the market with excess supply. Turn off the darn IPO spigot, and corporate buybacks can help digest these shares. But we've got a seemingly endless supply of new stocks. Most of them I don't really want. Most of them you don't want. Most of them stink. And that's putting real pressure on the market. If these insiders got to get out at all costs, what the heck? Why should you buy from them? Makes no sense. The deals in the pipe, they must be canceled to make me more bullish. Finally, you got to consider your fellow shareholders. Often they're your greatest enemy. They know how to buy things, whether it's crypto or tech or cruise lines or meme stocks, and they think their buying has the power to push stocks higher. Magical buying. And diamond hands. And it worked for a while. It don't work anymore. Do we think these meme investors will suddenly start saying, you know what? I got to do the present value of GameStop's business. I mean, maybe we ought to figure out the discounted cash flow of AMC. They never cared about that before. They certainly haven't learned how to do it now. Do you think they have real reasons when they make a case for buying something here? I don't know. Have you ever read what they have to say? They're on a permanent intellectual vacation. Look, I've been adamant. I mean, pound the table adamant that while we can have a temporary short covering rally, I bet you we get one tomorrow, this market's likely to get hammered here. I don't want you sucked in. It's been done every year for 20 years in this period. Now, others are finally joining in. They're saying, oh, my, maybe it's bad here. Well, you know, the bear. Well, we've been going ourselves. You know what I mean? And they've been saying I'm Yogi, or like the one that's in like the E.B. White. What is that guy? The Panda, whatever's in there. You know that guy. Well, whatever. I'll come up with him during the break. Wait, come on. Will you help me here? What is the one? The guy, Yo, poo. They think I'm poo. Like I'm poo. I've been seeing that on Twitter. He goes, he's poo. I thought it meant something else. Anyway, that alone doesn't give you a reason to buy. I can't honestly turn bullish in this market until you turn bearish, until we come up with some rationale for why the selling is going to stop. Right now, we simply don't have one other than the fact that we're poo. So we sit tight and we wait for something that might compel us to buy a stock because we think it will go higher. For the moment, though, we got nothing to hang our hats on. Remember that thing I did with the hats? If anything, we have a lot of reasons to sell, including tonight's report from Lennar, where the great home builder actually missed guidance. Here's the bottom line. Mindless dip buying has been a fantastic strategy for 15 months, but it's worthless in the face of a serious sell-off, which is what we have now. I've been encouraging you to sell ahead of what's usually the weakest time of the year. I can't turn positive until I find an actual reason to change my mind. For the moment, we're not getting any. So please, you want to be a buyer? Find a reason to buy. Let the pain of late September unfold before you pull the trigger. Otherwise, look, maybe make a couple of smackers, but you're going to get bushwhacked.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.